All right, let's dive into Grand Canyon Education, ticker LOPE. We're breaking down their Q2 2025 earnings call. And folks, this was a big one. It wasn't just another solid quarter, it was a real statement to the market. So let's get right into what caused all the commotion.
And here's the headline number that got everyone talking. On August 7th, the stock just took off, a massive 13% plus jump in a single day. I mean, a move like that, that's not just a good job, that's Wall Street screaming its approval. The big question is why?
Okay, but a big price jump can sometimes just be noise, right? Not this time. Look at the trading volume. We're talking nearly 1 million shares changed hands. That's 3 times the usual daily flow. This wasn't just a handful of traders getting excited. This was big money stepping up and saying, "We're in." The story for LOPE just got a major rewrite.
When the market shouts that loud, you really have to listen. So let's peel back the layers and dig into the actual numbers that lit the fuse on this thing.
And here it is, plain and simple. They absolutely crushed it. We're talking a beat on both revenue and earnings. Revenue came in at $247.5 million. That's almost $7 million more than analysts were expecting. And the earnings per share? $1.53. That blew past estimates by a full 16 cents. This isn't some accounting trick. This is just pure, solid execution.
So you gotta ask, where did all that extra cash come from? Well, it wasn't just one thing, it was everything. The real engine of this business is student enrollment, and it was firing on all cylinders, online, hybrid, you name it. They were hitting it out of the park across the board. Let's put a number on that. Overall enrollment grew by a whopping 10.3% year over year, pushing them past 117,000 students. Now you have to remember, higher education is a pretty mature industry, so posting double-digit growth at this kind of scale, that's not just growing with the market, that's actively taking market share. It's a really big deal. But if you dig just a little deeper, you find the real superstar of the quarter, the hybrid segment. I mean, look at that number, 15.4% growth. That is just explosive. And this is a super important part of their business, one that's in high demand and brings in great margins. The momentum here is absolutely incredible. So let's look at how they pulled this off. Numbers like this don't just happen by accident, right? There's a strategy behind it. A well-oiled machine with 3 key parts that is just clicking with students right now.
And here are those 3 pillars: online, hybrid, and the traditional on-the-ground campus. By diversifying like this, they're not putting all their eggs in one basket. It's a huge strategic plus, letting them connect with pretty much any kind of student out there.
First up, online. New student signups here absolutely surged. We're talking mid-teens growth, which just blew away what anyone was expecting. And again, this isn't luck. They are constantly innovating, rolling out more than 20 new programs every single year that are actually tied to what employers want. They've built relationships with over 5,500 companies, and critically, they're really good at keeping the students they get.
And then there's this major trend that the CEO, Brian Mueller, pointed out. He said there's a big shift happening with younger students, the 18 to 25 crowd. More and more of them are choosing to do their entire degree online from the get-go. Think about that. That's a huge demographic wave, and GCU is sitting there with a giant surfboard, their online program catalog, ready to catch it.
Okay, so remember that insane 15% growth in the hybrid segment? To really get why that's happening, you need to know this one acronym, ABSN. It stands for Accelerated Bachelor of Science in Nursing. Basically, it's a fast-track program for people who already have a bachelor's degree in something else but want to switch careers and become a nurse fast. And GCE isn't just sitting back. They are hitting the accelerator hard on this. Their goal is to have 80 of these locations. They're opening 5 new ones this year alone in huge markets like Boston and New York City. But here's the really brilliant part. They created online prerequisite courses that act as a funnel. Get this, they've already got over 17,000 people enrolled in those. That is a massive pre-qualified pipeline of future students just waiting to sign up. A great quarter is one thing, but as we all know, the stock market is all about what's next. So let's look at what management is telling us about the future. This is where a good story can turn into a great investment.
And here's the proof that they believe the good times will keep rolling. Management didn't just say things are good, they put their money where their mouth is and raised their official guidance for the full year. Both revenue and earnings forecasts got a bump. When a company does that, they're sending a crystal clear signal to investors. This isn't a fluke. We're confident this momentum is here to stay.
So, what about the big scary elephant in the room for this industry? Regulation.
Well, on the earnings call, management pretty much took that concern and threw it out the window. They said the new higher ed bill would have little to no impact on them. In fact, they even pointed to things like the new Workforce Pell Grant as a potential positive. They basically took what could have been a major worry for investors and just diffused it. On top of all that great operational news, they're also being really smart with their money. They spent over $47 million in just one quarter buying back their own stock. That's a direct way of putting value back into shareholders' pockets. Add to that some clever tax planning, and you've got a management team that is clearly focused on rewarding its investors. Wall Street absolutely loves to see this stuff.
Okay, last section. Let's pull this all together and figure out what it means going forward. This is the next call, where we look at the potential catalysts, the risks, and give you our official rating.
So, what are we watching for next quarter? On the upside, the catalysts are pretty clear. Can they keep this amazing enrollment growth going? And how quickly can they get those new hybrid sites up and running? Now, on the risk side, you've always got to keep an eye on things. We'll be watching to see if they can maintain their pricing power and make sure costs don't start creeping up and eating into those profit margins.
And really, this is the single biggest takeaway from the whole call. The entire story for GCE has shifted. People used to see the stock as just a slow and steady, reliable company, but not anymore. This quarter proved that they've hit a new gear. This is now a story about accelerating growth, all thanks to some truly fantastic execution.
So that leads us to the billion-dollar question for next quarter. Can they do it again? Can they keep up this blistering pace? You know, with the trends we're seeing, with management's own confident forecasts, and with all the momentum they have, our take is that, yeah, they probably can. The table is set for another really strong report. So, with all that said, here's our official Talk Tickers rating, Outperform. You've got this perfect storm of accelerating growth, bigger profit margins, and a friendly environment to operate in. It all comes together to create a really compelling, bullish case. They are firing on all cylinders, and we expect the market will continue to reward that performance.
And of course, just a quick reminder for everyone, this analysis is for informational purposes only, and this is not financial advice.